Stocks were down today, with the S&P 500 falling 0.84%. This drop was led by the sectors of real estate, communication services, and consumer discretionary. The Nasdaq fell even further, falling 1.27%, meaning it has a month loss of almost 2%. In Canada, stocks were down 0.3%. This was led by a drop in the information technology, materials, and energy sectors. In Europe, the FTSE was down 0.5%, and in Asia, the Nikkei was down 0.67%. Oil was up over 2% on the day, but had a pretty volatile day, actually being lower at the beginning of trading. Gold was down on the day, almost 0.8%. Looking at Treasury yields, the US 10-year was at 0.69%, and the Canadian 10-year was at 0.7%. The winners in the currency markets for today were the British pound and the Australia dollar, while the losers were the Canadian dollar and the US dollar. US housing couldn't keep going up forever, as we got news here that housing starts fell 5.1% in August, essentially meaning that there is going to be slightly less supply than in previous months for their increase. This shouldn't be too much of a surprise, though, that it started to decrease a bit when you consider how high it has been the previous month. For example, the revised number for July came out with a surge of 17.9%. It's a huge number to compare to the previous year and even earlier this year, as housing has continued to be one of the strongest performing sectors of the economy. Looking at future projects, you can look at applications to build. It actually decreased 0.9% for the month, so not too much. A large part of this decrease has actually come more in the area of multifamily housing, as that's been slightly more volatile. It's interesting to note here too that it says that spending on furniture and home uh, finishing outlets increased 3.8% for August from the previous year. So while the housing market isn't seeing too much of an increase, we are seeing kind of that people are still spending money on furniture and things like that. I expect that the housing market might stay a little more to this level. On my end of my thoughts are that it's kind of good news in a way that housing isn't continuing to heat up at the same pace as it was, because I feel like that would end up not being so well in the coming months, especially once we start to see more of the effects that happened from the pandemic, especially when things like defaults and bankruptcies start to pick up. On the other hand, interest rates have been quite low. When you look at the prime rate, it's been dropping, it is below 3%. And with the news coming from the Fed that they expect that interest rates will be near zero for the next 3 years, you can probably expect that the mortgage rates will stay quite low and might have positive effects going on the housing markets into the future, as people want to get a house, especially with low rates like that. But I'd just be warned that even though rates are low, you still gotta be wary of those housing prices, because if they drop, as we've seen the prices continue to increase, it could still be detrimental to purchase a house that instantly loses a portion of its value, and then essentially you have a mortgage that is essentially worth the value of your house or more. Could be a rough situation. Continuing the discussion on interest rates, we got some interesting news coming out of England, as the Bank of England has given a signal and discussed that they're looking at the possibility of moving into the negative rate territory. Currently, their rate is at 0.1%, but they're looking at possibly seeing how they can move the rate to the negative territory, as a lot of areas in Europe are and Japan are like that. It's an interesting decision that they've made to look into that, as previous reports going back have said that they thought there would be detrimental impact to the financial industry and area, and it might not actually be beneficial to go in that negative territory. The reason they're doing this is due to a lot of economic uncertainty in the region, as they've been struggling with the pandemic, as they've seen cases is continue to rise, and that it might be more beneficial to continue to lower interest rates. They already have a decent amount of quantitative easing, which essentially means that the central bank there purchases back government debt to try and lower rates. So their buying back bond program is currently at £745 billion. That isn't abnormal when you can look at other countries, especially the United States. The European Central Bank are all doing the exact same thing. We're seeing the central banks buy large amounts of government debts, not even government debt, as some like the Fed are buying mortgages and corporate bonds to try and improve those areas as well. It'll be kind of interesting to see if they follow through on this decision to actually move into negative territory. Negative interest rates are an interesting thing. I still haven't quite understand why anyone would really buy into negative interest rates. I don't know why investors would purchase a negative bond. I mean, I've seen stuff talking about when it's tied to inflation, or you look at maybe risk, trying to diversify. But in the end, I just don't think you're ever gonna get the highest return you can if you have negative rates. Just doesn't quite seem to make sense to me. US jobless numbers came out today, with initial jobless claims for the previous week coming in at 860,000. That is higher than expected of 850,000, but lower than the prior weeks of 884,000. I would be warned though, when you compare this to the previous weeks, it was about a little bit ago that they actually revised the way they're actually counting these numbers. So going back a month or so, the numbers aren't going to be the exact same, as they will essentially be calculated differently. Looking at continued claims for the week ended September 5th, it says here the total was 12.6 million, which is actually lower than expectations of 13 million and lower than the 13.385 the previous week. So some kind of good news, slightly bad. Still not great when you consider that initial jobless claims are still at 800,000, and that's still quite a large number when you consider historical precedents. It's a interesting job market. So we have seen some recovery, but it's hard to say exactly where that's going to go, as more jobs seem to be in that state of not coming back. They might get like a new job, but the same job they had before isn't looking back as temporary laid off anymore. It actually says here though, looking on an unadjusted basis, actual claims rose 20,000 from the previous week. So that shows you when you don't adjust for things, because that takes into account like seasonally adjusted, that we've actually seen a bit of a spike. Looking actually the claims though, 13 million are received regular state benefits, 14.5 million are receiving unemployment checks, as well as a total of people who have applied for unemployment are 29.6 million. So it really shows you just how drastic unemployment is in the United States. It's comparable to many places around the world, but this pandemic has really took a toll, and I don't think we've seen necessarily the worst. It'll be interesting to see if the governments in the states decides on their stimulus package and what they'll do there. Will it be as big, say a few trillion, or will it be a smaller number? It's hard to say right now, but that might have effect on the employment market, or it might just essentially push things back even further.